Prop industry is evolving so fast. Every other week is like a new lifetime in this industry. In this video, I want to talk about how and why certain prop firms are failing, what are red flags in joining a prop firm, and how you should choose one. Hi, my name is Stan, CEO of FundingTraders.com. Actually, before I do the video, I want to say that we do have a poker tournament. Every Saturday we do a poker tournament starting in 20 minutes. So I'm trying to bang out this video real fast. If you'd like to join us and you know how to play poker, you're more than welcome to join, because we give out top 3 spots get accounts, and also bonuses for knocking out CEO, me, and our CEO, David. So more than welcome to join us every Saturday for that fun. But let's get back onto the video. There are red flags that I want to discuss through. One of them is actually the age of the CEOs that you're dealing with. I don't want to knock on anybody's age just because they're young, but the chances are that if you are in your early 20s, you just simply don't have enough experience in the business world to run certain companies. And this is what we're seeing right now. A bunch of startup and okay-ish prop firms are shutting down. And why is that happening? It's not only because the CEO don't know how to manage, it's simply because a lot of these firms are just good marketing firms. So what happens with these marketing firms, which is actually good for the end user, meaning you, traders, is that since they only do marketing, they create more and more favorable conditions for the retail traders to enter. So they give you all these promises and make all these promises for you to join, and none of them actually are trading companies at the end of the day. But real trading companies like FTMO, like us, which do have e-books, and we do want to have sustainable traders level up, and make more and more money, we unfortunately have to compete in this space as well. And by competing in the space, so FTMO was the last one to remove all these rules about 30-day time limit for your trading to pass the challenge. And why was FTMO so tough? Well, FTMO is a real firm. That's why the level of toughness was on another level, so to speak, right? It was harder than a lot of these marketing firms which promise you the world and don't deliver in many instances. And that's why they are shutting down. So the CEOs, first of all, no managerial experience. When it gets tough and overwhelming, when their users come at increased rate, they're simply ill-equipped to manage the size and the sheer volume of incoming traffic of users, and then they start doing all the industry standard bullshit without paying or without doing, which is not, they're starting being dishonest, because it's like, have you ever seen those cartoons where somebody is working on the assembly line, right? And the speed of the assembly line increases, and then they're either eating the pills or throwing everything out because they can't manage the sheer volume of the incoming speed. So that's what happens with a lot of young CEOs. They simply are ill-equipped with managing sheer volume and the workload that is necessary to run a business of that size. And again, some young CEOs are extremely talented and they can handle it, but you also have to see what kind of background they have also. So number 2 is what kind of background those CEOs have. Is this a 20-year-old marketing kid just showing you a Ferrari that he rented or he bought with proceeds from being a marketer? Or does he have some kind of background with trading, with Wall Street, with anything to do with finance? What did he do before that, right? Because if he's 19 years old and he didn't do anything before that and he's opening up his firm, well, again, let's be honest. Would you do business with a 19-year-old kid who wants to, I don't know, pick any industry you're a part of, right? So do you really think that he has the necessary skills? We were all at 19 at some point, right? So the sheer lack of experience in the world will cause problems when the volume increases, so they choke. And nothing wrong with that. That's why 99.9% of companies are not run by 19-year-olds, right? They're run by older, more seasoned guys who've been around the block. Look at the history of these prop firms. Look at who their CEO is, their management team, what kind of background they have, what have they done before, and are they actually traders? Have they traded before? And all this, do they give advice in trading? Do they have presence on the internet? Do they give interviews, or they hide behind the anonymity and stuff like that, where they simply are inaccessible and you don't know who they are, where they're from, what are they doing? And then obviously when they ultimately do a rug pull, like a couple of companies who have already done, I think, this past month. And I think I've seen this movie before with Forex brokerages firms from mid-2000s to 2010s. Same ordeal happened. Basically, what's going to happen next is a lot of bullshit artists will start failing, which is a good thing. All these overly promised, which is point number 3, overly promised firms where they're just strictly marketing. So they promise you everything and best conditions ever, to the point where they can't even justify how the fuck they're making money, right? When you see those type of aggressive conditions which deviate a lot from the industry standard, they're more likely than not trying to lure in the customers. Yeah, unless it's a sizable firm which can actually deliver on their promise, then you're dealing with most likely with a marketing firm, and that's all they are at the end of the day. And that's another red flag that I would stay away from. So the industry consolidation is going to happen. What's going to occur? All these weak players will soon starting just checking out and closing doors, with the big players probably absorbing volume of buying other companies and consolidating the industry, where maybe in a year or two we're gonna have maybe 5 giants that will pretty much control 80 to 90% of volume of prop industry firms in Forex space. And the same thing will happen with the futures and stock trading. I think the Forex space will be also consolidating, removing the bad players. And I, as CEO, have been speaking to a bunch of other CEOs from the industry and trying to get them on board, start policing the industry ourselves. That's why I'm making all these videos, exposing all this nonsense, simply because I want us to remove the bad apples, remove the bad players, because the more headache they create, the more headache than I have. Like I've always been saying, it's better for CEOs of the companies, of the prop firms, to police themselves, police the industry, rather than to invite the regulations, which will only increase costs of doing business, which then as companies will pass it on to you, and will lock out a lot of lower tier traders who have little capital to start trading with. Right? And that's the whole point of prop firms. With a little bit of capital, you get access to large amounts of capital, because if you have the skill set, you can then utilize your skill set, leverage it up, and gain access to capital, which will enable you to build up your own war chest over time. And then you can trade either your own accounts, or at the same time also get scaled up to the point where you're trading millions of dollars with prop firms as well. As always, my door is always open. I want to welcome everybody who have any questions. We trade daily on Discord, on Telegram. Ask any questions. And every Saturday, you're more than welcome to join us to play poker. And if you're lucky enough to take me out or one of our management teams, you're more than welcome to get a special bonus. And top 3 places get accounts. So hope to see you there one day, and good luck.